Alphabet earnings preview, AI initiatives, ad performance and tech spending. Breaking: Alphabet's upcoming quarterly report could send shockwaves through both the tech and AI ecosystems, so stay tuned. The parent company of Google will be the very first big tech heavyweight to unveil second quarter numbers on July 23, and the results may rewrite Wall Street's narrative about artificial intelligence, digital advertising, and corporate tech budgets. But here's where it gets controversial. Bank of America analyst Justin Post, who sits in the top 1% of all Wall Street researchers, just nudged his already bullish forecasts even higher. In his view, Google's core search engine continues to shrug off economic jitters, while foreign exchange tailwinds and a generally friendlier macro backdrop have quietly improved as the quarter rolled on. Post now expects Alphabet to generate roughly $81 billion in revenue and $2.21 in earnings per share, both a notch above his prior calls of $80 billion and $2.15, and well ahead of the broader analyst crowd, which is sitting at $79.5 billion in revenue and the same $2.15 EPS. What does that mean in everyday terms? Alphabet could haul in about $1 billion more than consensus in a single 3-month stretch, equivalent to the entire annual revenue of some mid-cap tech firms. On search advertising, Google's bread and butter, Post models 11% year-over-year growth, versus 9% expected by the street. For the cloud division, he penciled in $13.2 billion, again edging past consensus at $13.1 billion. A recent bump in Workspace subscription prices, especially for AI-enhanced tiers, should also provide extra lift. And this is the part most people miss. Alphabet's hiring data send a mixed message. Job postings climbed 14% from the first quarter, hinting the company may be ready to staff up again. In theory, that new hiring could compress margins. Yet Google is simultaneously pushing a voluntary buyout program, a clear sign that management still cares about cost discipline. Which force wins, expansion or austerity, remains a live debate. Looking ahead, Post believes upside catalysts include stronger advertiser budgets since April, particularly among travel, retail, and entertainment brands. Solid search metrics that demonstrate Alphabet can successfully weave AI into everyday queries without cannibalizing ad dollars. A possible surprise rebound at YouTube, thanks to easier year-ago comparisons. Growing demand for Google Cloud capacity and brand-new Workspace AI features. Still, investors will be laser-focused on one tiny line item, paid click growth. For beginners, paid clicks measure how often users click on sponsored links and are a direct proxy for advertiser demand. Some industry trackers warn that click volume cooled slightly in Q2, but Post argues the company is getting more money out of each click. Adjusting for the extra leap day in Q1, he expects paid clicks to rise roughly 2% year-over-year. Alphabet will also need to update shareholders on several AI milestones: Gemini model adoption, AI mode integration within search, capital expenditure trends for new data centers, and the evolving partnership with OpenAI. Post remains constructive on Google's ability to drive real-world AI usage, pointing to ongoing Gemini upgrades and fresh pricing actions across Workspace. Yet an entirely different storm cloud looms: the U.S. Department of Justice's antitrust trial over Google's search practices. A verdict could land in early August, just days after the earnings call. Post warns that no matter how flashy the Q2 numbers look, uncertainty around the legal outcome may cap near-term stock gains. Even so, he reiterates a buy rating and lifts his price target from $200 to $210, implying roughly 10.5% upside from where the shares trade today. He is hardly alone. 29 other analysts also say buy, while 9 sit on the sidelines with hold, producing a strong buy consensus, and an average price goal near $206.51, or about 8% appreciation over the next 12 months. Investor takeaway: TipRanks continues to flag Alphabet as one of its best stocks to buy for those hunting for attractive valuations and solid growth drivers. Just remember that any single analyst view is an opinion, not gospel. Always pair these insights with your own due diligence. Controversial thought to mull over: could successful AI monetization actually weaken Google's antitrust defense by proving that its search dominance yields outsized profits? Or will demonstrating strong competition in the AI arena bolster Google's case? Your turn. Do you believe the DOJ verdict will overshadow whatever Alphabet reports this week? Might rising headcount derail margin expansion? Let us know whether you're bullish, bearish, or somewhere in between, and why, in the comments below. Alphabet seeks to reassure investors as AI rivals step up competition. In a high-stakes move to protect its market position, Alphabet, the parent company of Google, will soon address investors to calm fears about growing competition from artificial intelligence (AI) firms. This comes as Alphabet's rivals, such as OpenAI and Perplexity, are making significant strides that could potentially erode Google's dominance in search and advertising. Imagine this: Alphabet is in a heated battle to keep its crown as the tech giant, and the stakes couldn't be higher. The landscape of competition. Alphabet's competitors, including AI startups like OpenAI and Perplexity, have managed to attract millions of users to their platforms. These companies are not just content with building powerful AI, they are also developing their own web browsers to challenge Google Chrome. Meanwhile, a US court is considering whether to force Alphabet to divest Chrome, adding another layer of complexity to the situation. Alphabet's strategy. To stay ahead, Alphabet has introduced several AI-driven features, such as AI overviews, which provide AI-generated summaries at the top of search results. This feature alone has attracted 1.5 billion monthly users. Additionally, Alphabet is making more of its Gemini AI models available to enterprise customers, further integrating AI into its core services. The integration of AI into Google's search engine is crucial for maintaining its advertising prowess. By offering more targeted and effective ads, Alphabet aims to keep advertisers happy and ensure they see a strong return on investment. As BofA global research analysts noted, AI targeting advantages and increasing ad loads in AI overviews could drive ad performance above traditional search. The broader context. Wall Street is closely watching how big tech companies, including Alphabet, are leveraging their massive AI investments, which are expected to reach $320 billion this year. In April, Google reassured investors with better-than-expected first-quarter earnings, driven by strong AI demand. However, the launch of AI-powered browsers by OpenAI and Perplexity has intensified the pressure on Google's search business, which is already facing challenges from AI chatbots siphoning off search queries. D.A. Davidson analyst Gil Luria highlighted the potential threat: as those AI companies deploy their browsers, that'll take more searches away from Google. But the bigger threat will be when those companies have enough of a user base that they start selling advertising. It's only when Google loses advertisers that the revenue will be impacted. Other developments. Alphabet's autonomous vehicle division, Waymo, is also in the spotlight. With Elon Musk's Tesla rolling out a test fleet in Austin, Texas, Waymo's progress could become a key talking point during earnings calls. Financial expectations. For the second quarter, analysts expect Alphabet to report a nearly 11% increase in total revenue, according to LSEG data. Advertising revenue is projected to grow by 7.5%, while the cloud computing segment is expected to see a 26.2% jump. Earnings per share are anticipated to be around $2.18, excluding one-time items. ### market sentiment. Despite these positive projections, Alphabet's stock has remained largely flat this year, lagging behind other mega-cap stocks like Nvidia, which has surged 28%, and Tesla, which has declined by 19%. Among 55 brokerages, Alphabet is rated A by on average, with a median price target of $203.84. But here's where it gets controversial. While Alphabet is taking significant steps to fortify its position, some argue that the rapid advancement of AI by its competitors could still pose a formidable challenge. What do you think? Will Alphabet's strategies be enough to maintain its lead, or are we witnessing the beginning of a new era in tech dominance? Share your thoughts in the comments below.